G'day guys, it's Ben and Simon here from Pumped on Property. Welcome to the final December update for the year. I can't believe it. We are just saying off camera that it feels like it's gone that fast. You know, we've really enjoyed filming this year. And for those of you that are subscribed to the email version update of this as well, which pulls heaps more data, I've just really enjoyed bringing this to you guys. And as you know, I fully geek out on the data. So December's been an incredible month. A unique month, lots going on data-wise, property-wise at the moment. So why don't we crack in?
Yeah, absolutely. I think the tide has turned on more of a global scale. I was listening to a really cool podcast from Chris Williamson and Mark Andreessen the other day, and they were talking about this sentiment shift on a global level. For some reason, people just feel more optimistic and positive about the future. And I think it's because, you know, most Western economies are going into that interest rate declining cycle. And what we'll talk about soon enough is, you know, Australia is looking like they're going to be following suit. But to talk about the monthly and the annual capital growth rates throughout the country, kick it off.
You know, same as most of the other months this year, Brisbane, Perth, Adelaide and Darwin. And we have been talking about Darwin a bit, like statistically speaking, it is the most undervalued capital city in Australia. It doesn't mean it's the right one to go rushing into and buying right now just because it doesn't have the population growth or some of the infrastructure stuff that other cities or major regional markets have. But I think that's a bit of a sleeper and one you'll start to hear about in the next 5 years a bit.
Yeah, when I was reading the best and worst report from CoreLogic, you know, Darwin basically is the cheapest capital city in Australia. You know, you can still pick up properties up there cheap as chips, which is what would probably make it look a little bit more attractive for those investors with a lower budget. And, you know, there is some cool things happening with the Defence Force up there as well. So
big time.
We'll have to watch this space and see where we go. It's just little bit too small for my liking. I'm a big city guy. I like your Brisbanes, your Melbournes, your Sydneys, your Perths. But yeah, I think it'll be interesting to see how the data starts looking next year.
In terms of the annuals this year, Sydney's a little bit up. Obviously, Brisbane, Perth and Adelaide have gone absolutely gangbusters on the annual, and Darwin's just nudged above zero now as well. But, you know, Perth has had a phenomenal year, as had Adelaide and Brisbane, all of them doing between 10 and 20% in the last 12 months. So big numbers for all those homeowners and investors out there. Congratulations, you made a shit ton of equity again. And we'll talk about this later in the video, just how good those markets are looking for the new year as well.
And when we look at vacancy rates, they have increased across the board, but still super low and still super undersupplied. But we've got Sydney, Melbourne, Canberra and Darwin sitting at a vacancy rate above 1% at the moment. Highest being in Canberra around 1.7%. So still super undersupplied considering that 2% is sort of a target range. But in Brisbane, Perth, Adelaide and Hobart, they're all sitting at a vacancy rate at 1% or lower. So still super undersupplied. And it's looking like we'll see rents stabilise through 2025 according to the Lewis Christopher boom bust report from SQM.
You know, what's crazy is we are splitting hairs here because these are some of the most chronically undersupplied vacancy rates we've ever seen in Australian history. It is phenomenally undersupplied across the board at the moment. 2%, as you guys know, is phenomenal. So even though some of those markets are sitting a little bit above the 1% mark, that is so normal. Anything even up to 3% is still considered okay. So things are looking really positive, especially with the population injection incoming in the next few years. And I think those rates will continue to hold very low until somehow we figure out a way to create more supply. On top of this, in the last month, confidence is finally on the way up a little bit. And I think it's referring to what you said. I think people have just got the shits with like continuing to hold on to COVID and they've just got to start moving on with their lives. So the fact that I think gold's going up, stocks are going up, obviously crypto's gone ballistic, a whole bunch of housing markets around the world are on the way up. Interest rates are on the way down. And whether you like him or you don't like him, Trump's sort of coming out with some pretty nostalgic terminology like the golden age of the American economy, which sort of takes people back to that 20s vibe, the Gatsby era type thing. And I think we need some of that positive news starting to come out globally. I know there's so many horrible things continuing to go on as well. But at some point or another, I think most of us want a better life for ourselves. We want a better life for our family. We want choices. And we realize that no matter how much we earn, we're never going to be able to save our way there. And so that money is starting to creep back into the markets. The confidence levels that we're seeing at the moment are the strongest we've seen in over 12 months, maybe even 18 months, which is crazy because some of the levels we have been living in are as low as the last GFC or at the very, very bottom of COVID. And I don't think the market's felt that bad in the last 18 months.
But I can feel it as well when talking with investors and just anybody at this point in time. Like, everybody is feeling more optimistic and positive for the future, which is definitely a change in the positive direction. So I'm excited to see that people are feeling excited again coming into the Christmas and New Year period. You know, inflation seems to be getting under control. Looks like, according to RBA, CBA, SQM, basically across the board, interest rates starting to decline at some point in 2025. So let's go.
In terms of unemployment rates for the last month, nothing new here. It's sort of stabilized at about 4.1%, which long term is chronically below 100-year or 50-year averages. In terms of lending rates, again, not much has changed at the moment. 62% going to mums and dads, owner-occupiers for their own homes, and about 38% going to investors. A little bit more than, I suppose, historically normal. I think it's normally about a 70-30 split, and that's probably just the result of investors or homeowners with a lot of equity, who have been sitting on the sidelines for 5 or 6 years throughout COVID, just coming back into the market now, especially off the back of 3 markets in Australia having a 10% growth year. Generally, when we find a market having a 10% growth year based on our analysis of 50 years of data across Australia's capital cities, we generally see people sort of jumping into those markets, trying to sort of rinse the top and try and get a little bit more growth off whatever they buy in the following year.
Looking at those interest rates, no changes over the month. Obviously, that's understandable. The RBA held the rates at 4.35%, but the good news is there seems to be a bit of a light at the end of the tunnel, and this could be one of the reasons we're seeing that sentiment improve at the moment, because CBA came out recently indicating that they believe we could see the first interest rate drop of 25 basis points at the Fed meeting. SQM believe it might happen at some point in mid-2025, and then ANZ are expecting it to be at some point late 2025. But really across the board, they expect the RBA to move into an interest rate declining cycle at some point in 2025.
In terms of distressed listings in the last month, when you compare this month last year and 2023, they're actually down 0.3.1% again. Another great example of don't buy the hype, really look at the data and see what's really going on.
Now, the gold nugget of the month is looking at the boom bust report from Lewis Christopher at SQM. I love the way that he puts this together because he looks at so many different economic fundamentals and he takes into consideration a bunch of different scenarios, because at the end of the day, there's so many contributing factors to where the Australian economy and where the Australian property market could head. But it's looking like 2025 is going to be another incredible year for the likes of Brisbane, Perth, and Adelaide, with the worst case scenario seeing Brisbane go up by 4%, Adelaide go up by 4%, and Perth going up by 7%. But best case scenario in those 3 markets is for Brisbane to go up 16%, Adelaide 14%, and Perth 19%. So it might land somewhere in between there, depending on what happens with interest rates and when they actually start to decline. But huge growth rates expected in all of those markets again. I'm praying for another double-digit growth year.
Now, the last thing we wanted to drop in this month's market update, the last for the year, is just our little piece of positive news. Again, in the SQM boom bust report, based on 3 of those scenarios, we're expecting around about 500,000 new people to move to Australia from overseas in the next 12 months, which is absolutely phenomenal. Firstly, they pay a lot of money to the Australian government, which helps with the tax deficit that we're in at the moment. Obviously, all of those extra people come in, it creates more jobs, creates more undersupply in the job market, puts more pressure on things. On top of that, with not enough houses for everybody to be in Australia at the moment, it continues to put monster pressure on housing, especially in those markets like Brisbane, Sydney, and Melbourne, where these people are moving to and then spreading around the country from there. But again, I know it's been a couple of hard years. And I know there'll be many, many hard years to come in the next 5 or 10, but the next few years in particular look phenomenal for the right markets, which really to me look like Brisbane at the moment and Melbourne personally. But obviously Adelaide and Perth, if you're into those markets as well, look really good.
What I love most about this population growth in Australia is we do attract a lot of skilled migrants, a lot of high quality demographics. And it's because we've got such good employment opportunities, a really great average household income. It's obviously because we've got a great healthcare system, a great education system as well. So we've got lots of students from China and India moving out to Australia to gain access to those schools, that education. So it's not like we're bringing in plebs or low quality socioeconomic demographics. We are bringing in some incredible people that are going to massively contribute to our economy. So, that has a huge positive impact on property prices and obviously vacancy rates, everything.
I think I will finish off the video by just saying that when you look at long-term history in the UK or America, when those markets were growing massively from a population perspective, their property markets were generally more stable. And that's just simply a supply and demand thing. When you're bringing in heaps of people and not creating enough space for those people to live, rents generally end up going up over the longer term, and so do house prices. It's as those markets started to stabilize in their population that their booms and busts got heavier. And so we know at the moment that the Australian government is trying to do everything it can to make Australia super desirable. But at the same time, it's very, very difficult and expensive for developers to bring on enough product fast enough, especially in the likes of Brisbane, parts of Perth and Adelaide right now. Like Sydney's doing a great job at bringing product to market, so's Melbourne. But some of these markets are chronically undersupplied. And I've read even things like Brisbane could supply almost double what it's doing right now for the next 10 years and not even meet current demand for that time in the future. So there's incredible things happening in Australia. It's like really is the land of opportunity. And I think you can live what was an American dream once in Australia right now. I know it's not easy for everybody, but with the right plan, the right team, the right attitude and the right strategy over the next 15 years, you can completely change your stars, which is what Simon and I are personally working on doing for our families at the moment, just one small step at a time. And we really do wish you the best through this holiday season. Can't wait to be back at this with you next year. The shit that we've got coming, I've got to say, like we've done stuff in the past. I think we're at video 800 and something, but what we've got planned for you guys in the new year in terms of different varieties of content, guests and those sorts of things coming on. We're just super, super excited about the new year, and hopefully it can become that partner that you can lean on and trust to bring you the best information on the market and to help you make great decisions, whether you're working with us or continuing to smash it on your own moving forward. But we wish you guys all the best. Have a great Chrissy break and let's get stuck in 2025. G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just want to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom.